All right, we have episode 2 of the NAGGL series, and today I'm sitting down with someone who I really respect because she started at the bottom and worked her way up to VP of lending at one of the highest producing SBA loan brokers in the country. Ladies and gentlemen, we have Shay Kleinschmidt from FranFund with us today. And as one of the top intermediaries in the industry, I thought it'd be fun to sit down with her and ask her how we as SBA lenders can be good partners and get more business from brokerage shops like hers, but also what not to do. What sort of rookie mistakes are lenders making that's resulting in them getting less business from loan brokers? So sit back, relax, and enjoy the show. Without further ado, here is my interview with Shay.
The SBA industry is rooted in banking, and banking is old school, but that's all starting to change. You hear people talk about AI, and it all sounds great, but let's be real. You and I don't know the first thing about AI, but Lumos does. Lumos is an analytics company that provides small business lenders with better tools that drive better decisions in a more efficient process. Take the Lumos Business Report, for example. This is going to completely revolutionize how deals get underwritten, starting with the BDO. The Lumos Business Report allows lenders to search for a specific business and in seconds access all kinds of information like a business overview, industry data, insights into competition, average pricing, even a predicted expected loss, all tailored around that specific loan request. Guys, we can finally make credit decisions using actual data. Stop using what you think you know about an industry to make credit decisions and start using the whole story. Let Lumos take your small business lending to the next level with cutting-edge analytics and AI by going to lumosdata.com and scheduling your demo today. Can't you say like Art of SBA episode, blah, 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 take 1 next time?
How many episodes are y'all on?
Like 125 or something.
That's
122.
Awesome. How long have y'all been doing it?
4 years.
Oh.
Yeah, I feel like the first couple years we weren't that consistent. In fact, Madison wasn't even, I was editing my own stuff, and we started with audio only and then graduated to video. I edited maybe 4 with video, and then I realized I can't do that. And and now we're consistent every Thursday. But anyway, enough about me. Let's get to you. Shay, thank you for being here.
Thanks for having me.
So this is actually maybe one of the first times someone reached out to me. I don't know if you know this, but you have people. Your people reach out to me.
I had my people reach out to you. I was like, I want to be on this.
Yeah, and I had your people reach out to my people. But here you are. And, I looked into you because we don't just let anyone on the show, right? You got to be like legit. So that said, I don't know, a whole lot about what you're doing. So I want to get up to speed. So just give me an overview of what you do.
Yes. So my name is Shay Kleinschmidt. I am the VP of Lending at FranFund, and we are a consulting broker finance company. We do the ROBS program, which is the rollover for business startups. And then on the lending side, which my team does, we do mostly SBA, but we do offer other lending products. So we're kind of a one-stop shop, help them throughout the entire process. With pre-qualification, we do a soft credit pull, help them with all the loan documentation, and then we connect them to our network of lenders.
Okay, so I want to make sure I'm understanding that because that was a lot. First of all, FranFund's a big name in the space. They've been around a long time, ever since I remember.
Yeah, we just won the #1 franchise supplier with Entrepreneur in the finance sector. So we're really proud to hold that title this year.
Very cool. Congratulations.
Yeah, thanks.
And so I heard ROBS. I heard brokering SBA loans. I know about the data. What else? Did I miss anything?
We do equipment finance, unsecured term loans.
Okay.
We do have a credit repair specialist that we can refer people to if they just need
one-stop
credit.
Shop.
Yeah.
For people trying to start up franchises.
Mm-hmm. Yeah, we do a lot of startups. It's really the majority of the business that we do, but we also do expansions and acquisitions as well.
Okay. And are you getting fed business from the franchisors?
Yeah, so we're 99% referral based. So we get most of our business directly from franchisors and also the franchise broker networks.
Okay. Right. That makes sense. So I'm just curious, what were you doing before you got into this?
I've been with FranFund 11 years. So what I did previously just kind of doesn't matter anymore. There are little stepping stones to where I am now, which I'm so glad I found the franchise industry and SBA because it's just really become my passion.
So you knew
And
nothing about
I knew
the
nothing.
space.
I'm still shocked I'm in finance. I came with a communications background and I was actually in legal staffing, which is where I came from before FranFund.
Oh, very cool. Yeah. I mean, I can relate to that. I was a marketing major, so being in finance, I kind of learned the numbers of it
Hmm.
all out here on the streets.
Yeah.
But that's cool because I think it's easier to actually learn the numbers versus learning how to like speak to people.
Yeah, agreed. And I actually ran into the only other guy that was in lending when I first started at FranFund. He was on my flight here, and we're still great friends.
No
But when I
way.
started at FranFund, I went to Barnes and Noble and bought all the books on SBA and everything, and just tried to learn as much as I could.
If only there was a podcast.
I know, right?
That's really cool. So like talk to me about those early days because now you find yourself in a brand new kind of career and you're dealing with people who are making really big investments, big deals. It's obviously, everyone in watching knows the space. Like what's that first year look like? What are you doing?
Yeah. So, I mean, the first year I was at FranFund, we were a much, much smaller company, really founded on the ROBS program. And so lending was kind of a side piece. But throughout the years, we've really gained a reputation for lending. And now we have a much bigger presence in the SBA world. When people are starting out with us as a client, we just really try to educate them on everything, no negative surprises, and just make sure that they're well equipped and well prepared for the process they're about to be a part of.
Okay. Well, and by the way, I think I made a mistake earlier. I was thinking about a different company with the data, obviously.
Fran data.
Yeah. My mistake, but interesting. So like how much of your job it is or was like sales, like talking to people, selling kind of thing?
Yeah, so I mean, I kind of have a sales aspect to my position where I am selling FranFund's value to lenders to onboard them to work with us, and why we're a great partner when it comes to leads and the kind of leads that we provide. And then also, we are, of course, selling our service to our clients as well. So I do
Yeah.
have two different teams in my department. We have our lending specialists who are on the front end, and they are pre-qualifying people, walking them through our services and our process. So that's a bit of selling, but because we are referral based, we're not making cold calls or anything
Right.
like that.
But I mean, when I say sales, that's exactly what I mean.
Yeah.
I mean, sales is, people can call it whatever they want, but essentially
Mhm.
someone's calling you, they want your service, they're talking to someone, and what you say may impact their decision.
Yeah.
So it's providing them information, showing the value. That is sales.
Absolutely.
Now, are you running those divisions currently that you just talked about?
Yes.
Like overseeing. Did you start out in the roles that you're overseeing these people now? Did you start in that kind of role?
Correct. I started in an entry level position. I was a production specialist or a loan processor, and then just worked my way up, started managing that team. And then eventually I took over the whole department about 3 years ago, I think.
I mean, that's incredible. Like, what was it about your approach to the gig that kind of allowed you to, climb up the ladder?
When I started, there weren't a lot of processes in place. And so for people coming in, it was kind of a little bit chaotic. So I really just made time to create processes, start creating our templates. I used to create a business plan for brands. A couple brands actually ended up adopting them into their own processes, and just really creating everything what I was learning from, and not only the books I was reading, but also talking to lenders and what they needed in a deal to get a quick, efficient approval. And I just started implementing those things into our FranFund system. And from there, we started out only having about 1 or 2 lender partners because, again, we were just kind of an add-on. There wasn't a ton of business coming through lending. Rob's was our leader. So my goal was to really onboard a lot of lenders that had more flexible options that gave us a bigger bandwidth of the kind of deals
Sure.
that we could do.
No, that makes perfect sense. So you weren't necessarily hired to do that, but you took the initiative to do it and just started leading from your position essentially. And then, I guess one day they just said, "Hey, you're already doing all this anyway."
Yeah,
You
pretty
run
much.
it.
Yeah. They gave me objectives and I went out and did whatever I needed to do.
How do you do that when you're first in it and you don't have the experience, but you're talking to these people on the lending side or on the borrower side? Because I could remember my first year doing it on the phones where I put my foot in my mouth, a couple of times, like many times actually. Did you how do you sell, that first year while you're still building the experience? Like, was it hard or did it come natural for you? Like, what was it like being on the phones with these people?
I mean, I really just dived deep into as much education as I possibly could, not only at work, but in my personal time. Being a female and being young in that space and in the finance sector is already hard. And so I didn't want to come off as the blonde, like she doesn't know what she's doing. And so I really just dived deep and made sure that's not who I was going to be. But I was never afraid to say, you know what, I'm unsure about that. Let me find out through my coworkers, or let me reach out to my number one lender or whatever, and I'll get back to you.
See, that's interesting. I wish I had that foresight as a white male in the space. I decided to just BS my way through it a few times. And a couple of times it came back to bite me in the butt. So I do not advocate for that. When you don't know something, you say you don't know, you get back to them, you actually get back to them, everyone's happy. And, I essentially learned that the hard way, but I think I've already told that story on the podcast, so we'll move on. The SBA landscape is changing right before our eyes, and technology is a big driver of that. To think, just a decade ago, I was getting physical loan packages mailed to the office. We've come a long way. But a lot of folks are still getting tripped up on emailing documents back and forth. Files are too big, there's security concerns, and my personal favorite, I already sent you that. Now, I don't have those issues because I use NAGGL. NAGGL is a deal acceleration platform focused on driving efficiency and improving the borrower experience. They plug right into your existing LOS and solves the document chaos between your team and your borrowers. Borrowers get a place where they can collaborate on loan documents at any time, and your team can easily name, organize, and push documents with the click of a button. Welcome to the future. I encourage you to go to able.ai for more information and schedule your demo today. Give me an idea for how much volume of SBA 7A loans you guys are part of.
Yeah, so we are a privately held company, so I can't throw out a number, but I can tell you that if we were a direct lender, there is that SBA top 100 lender report that SBA generates each quarter. We would be in the top 15 on that list in loan volume.
Okay. All right. So that's like 300 million, roughly. But you don't have to agree or disagree. But that depends on units or dollar. You guys probably do a lot of units. Can you tell me your average loan? Was it like $500,000 or something?
Our average loan is about $500,000.
Okay, all right.
Because we do play a lot in the service business space.
Okay.
Our minimum loan amount is $100,000, but we do a lot in that $100,000 to $200,000 loans too.
Cool. And you that was a good poker face, by the way. That's a good job. You guys are, obviously a source of production in the SBA space, big player, funneling a lot of the franchisor, franchise broker traffic to lenders. Are lenders trying to get into your DMs constantly trying to get your business?
Yeah, I have worked really hard and my team has worked really hard to really create that reputation with lenders. And I think we're finally there. So I'm constantly getting people reaching out on our website. They can go to our partner section and just fill out a quick little questionnaire about what are you looking for with an email and a call number. And it goes directly to my email and I reach out for a phone call. We're getting more and more of that. I get LinkedIn messages. And, it's a small world in the SBA space, and lenders kind of hop around to different banks at times. And so I get a lot of lenders coming and saying, hey, I heard about you from so-and-so that's currently working with you, and he told me about the kind of deals you're doing. I would love to be added to that
Interesting.
list.
So you're actually open to that, people?
Absolutely.
Okay. And
the more lenders, the more options I have for our clients.
Interesting. Well, how do you vet them?
I vet them out based on key things that I look for in a lender. So obviously turnaround times are really important because time can kill deals. I want to make sure that they're flexible so they don't have really difficult approval parameters to hop through and they fit the kind of clients and leads that we're getting in. I look for nationwide, but they don't have to be nationwide, but That's always good. And then transparency is huge. If you don't like a deal, just tell me. I'm not going to push it on you. I just want to quick no. I don't want you to waste our time or our clients' time dragging them through underwriting when you didn't like it to begin with and then kill it.
Mm.
And
The
then
slow no.
right. Yeah. Fast no, reliable yes is what kind of our little tagline is.
Okay, well that's the dream, right? And that's what a lot of people should strive for, but that you're absolutely right. I mean, there's a lot of, I assume that's happened where somebody has taken someone down the road and it didn't get approved or whatever.
Right. And then communication, I was going to add that. So because we're referral based, we need to update those referral sources throughout the process. And so staying involved in the process, one, so we can communicate those updates, but two, we can help out if a lender is having a tough time getting a hold of a client, or maybe they're being combative about something and we can step in and help explain. Or on the other side, if our client is frustrated with the process and wants us to help step in, or maybe there's a question they want to ask us that they don't feel comfortable asking a lender, like, if I refinance my home, am I going to screw up my whole SBA deal? And so we do stay involved all the way up until the loan is closed, just so we can help it be a more streamlined process.
And they do, sometimes the borrowers do that in the closing process and take out debt. I know I had one where I got to be careful about giving away too much information, but it was a startup franchise, which I these days only do like one a year, but that's the one it was, and they bought a very expensive car
without telling anybody.
Just showed up on their credit, because these ones it takes a while for these franchise deals, right? Because you got to find a location, you got to do the construction. And so a lot of time could pass to the point where your credit reports expire, you pull a new credit report. So on those types of deals, you're more likely to find out the not good way that the borrower, they did something.
Yeah.
We've all been there.
Really try to educate them on the do's and the don'ts from the very beginning. So our lending specialists, which are the first stop in our process, are having that conversation of, hey, here's what you need to do, don't do to stay qualified. And then when it gets over to the loan processing side, our intro calls, our emails, everything is just reiterating all those points.
Interesting.
So, don't mess up credit. Don't quit your job. Don't go out and buy a mansion and not tell anybody.
And you probably have learned that the hard way.
Right.
Through the earlier days.
Yeah, we constantly are updating.
And you got to remind people multiple times, because there's a lot. Right? Yeah. This is the first time you're doing this. A lot of new information. I find myself repeating myself a lot.
Yep.
So that's good. That's a great way to add value to the transaction, right? Because to the lender and to the borrower, right? Because nobody wants that. Wait till after closing to buy the Bentley. Just kidding.
Yeah,
Don't
exactly.
do that. I wanted to ask you, just because since so many people are reaching out, it sounds like you kind of do have an open door sort of situation. And then you put them through the vetting process, but I was just curious, and if not, no worries. But when people reach out to you, lenders, are there ones that stick out more than others in terms of good outreach or bad outreach? Just for the sales folks in the SBA space that watch this, I'm just curious, what tips you can provide them about reaching out to a high volume loan intermediary type.
We're super open. So I'm always open to a conversation, but I will do some vetting before the call, just looking up who they are, what kind of deals they're doing. I'll even look on that top 100 list. Are they on there? How much have they done so far this year? So I'll basically are they active in the SBA space? But I've also have lenders that have come up to me that are just creating an SBA department and or a franchise department, and want to start growing it out, and they heard about us, and I've worked with banks to help them grow that space as well.
Okay, well, that's interesting, because on one hand you can be a part of something that and help it and steer it, or the other hand they don't have a track record, right? And then it's kind of a little more risky the first few that go through, because you don't know how they're gonna.
Absolutely. And we do tell our clients, if it's a new relationship, we're very transparent with our clients as well. And we just tell them, hey, this is one of the bank proposals we got you. Just FYI, we don't have a lot of experience with them. So this is a new relationship. So we're in this together.
Yeah.
So we're going to learn as we go together.
Well, that's a great transparent way of doing business. And I would imagine for some of the more emerging franchises too, like they're more open, because isn't it like harder to get those more emerging franchise deals done?
It is, and especially since the SBA got rid of the directory, brands that didn't have a chance to get on the directory, it's a little harder to place those now, but we do have lenders that are very open to
Yeah.
that. We just
Okay.
kind of have to work through what kind of strengths they have on the deal and things like that. But yeah, it's a little tougher with emerging, but we have a lot of lenders that are very comfortable with emerging brands. We just have to make sure that they fit those qualifications.
Right. They maybe have to be a little stronger on the personal
Right.
side, and maybe the franchisor needs to be a little bit more transparent about the few locations they've done.
Exactly.
Okay, cool. So with you guys opening the door to a lot of different lenders to have all these different options, does that make it harder to kind of learn the ins and outs of the different lenders? Or do you have like go-tos that you do like a ton of volume with and then keep some on the peripheral for like the other trickier ones? Like, how's it work? How do you manage so many different lender relationships?
Yeah, so we use Salesforce as our CRM, and I have an account for every lender that we work with, which has all the contacts entered for that bank, all of their approval parameters, the last time I talked to them. And it's also a place where my team can go and see most recent notes about them. Maybe they just changed their minimum credit score or something like that. And then we have a lender match in our system. So we have a client profile, and then when we click a lender match button, it takes the fields in the client's profile, such as their credit, their debt to income ratio, the franchise they're doing, the industry it's in, and they match it with our lender accounts and spits out a list. So I track it that way. But to answer your other question, we work with probably about 10 lenders the most because they are just more competitive and well-known in the franchise space. And then we do have our lenders outside of that, where if they don't fit that, then we go to that next segment and we go try and find, okay, who's a little bit unique that they can work with.
I mean, that sounds like you actually have a pretty legit operation over there with a whole database and the match system. I mean, it's a very professional way of doing it. Did you always do it that way, or was there a point where you just got too many kind of lenders and too much to keep track of, where you're like, we need to kind of put something into place?
Yeah, we really used 2020 to make some changes since we had a little bit of, bandwidth.
What happened in 2020?
And, just this big thing. So COVID, I mean, there was a lot going on, and we did help with PPP loans, so that kept us very busy. But we decided it was a great opportunity to put some money into our Salesforce system to really start building it out more towards our needs and our goals going into the future.
Yeah, because I mean, that COVID must have been a heck of a time for your guys' space, because you probably I know you mentioned service businesses, and they probably, some of those may be hit or miss, but like all the brick and mortar stuff, like a lot of that stuff probably took a huge hit.
It did. And we heard in the industry, there were a lot of companies saying that they couldn't do fitness, couldn't do restaurants, things like that. But we still had lenders that were very open to funding those types of brands. So even though there was a kind of a slowdown of people opening businesses at that time, we still had a pretty strong lead flow of people coming in and wanting to take advantage of kind of a different economic period and use it to their advantage. And then on our Rob side, so we do third-party administration for those operating franchisees. So we really wanted to make sure that they were in a good place. So those were a lot of the clients that we reached out to and helped facilitate PPP loans for. And we had lender connections that we could send them to, but we helped them with constant updates about all the changes that were going on. And with that, which was almost every day, the amount of hours I was working during that time was insane. The lenders that we worked with were really good about not having a minimum loan amount. They were open to working with the smaller businesses that maybe only needed $80,000 or maybe only $20,000 or something to keep their business afloat. But service-based businesses were still doing so well because a lot of people were doing home restoration and all the things. So that was a lot of the lead flow that we were seeing during that time.
And it got like sort of in a state-by-state situation, because in my head I'm thinking gyms are fine in Florida.
Yeah, that's true too.
But not so much in New York.
Exactly.
And stuff like that. So yeah, that was an interesting time. So you got really into the PPP situation. Was there any other impact that you saw in the franchise space from COVID? Like did any franchisors not make it through, or any lenders, get out of the game, like, or any borrowers like that had just, invested in or into a franchise and was in the middle of building out or something? Like what just paint the picture for me of what was going on in those early days.
Yeah, I mean, there was a lot of lender movement. So a lot of lenders changing banks. So I was kind of having to keep track of that and keep track of where my contacts were going. And then with our client pipeline, I mean, we did pretty well keeping our clients that we had on that third party administration side doing okay. We did have some closures, of course, because that just happens, but that happens without COVID anyways. But not enough to affect our business in a significantly negative way. And then as far as franchise closures and things like that, I think that, there were some brands that had to shut down some units. So you can see that in like the item 20 of the FDD. But I think a lot of brands have done a really good job pivoting afterwards and changing their business model a bit. Maybe they added drive-throughs, or now they do the food apps and things like that. So when something like that happens again,
a lot of that stuck around.
Right. Or fitness, they now have mobile app virtual classes you can do and things like that. So I think a lot of brands took it as an opportunity to just strengthen their products and services.
And I guess it was probably, it's a good time to be in a franchise network because you have that added support. That's one of the benefits, right?
Yeah.
You have support, but now in this period of, just craziness, right? It's like that support is more important now than ever.
Absolutely. And we pivoted and really tried to be an educational source for our franchise partners. So we were constantly on webinars with franchisors and their franchisees.
Oh, yeah.
Going through all of the incentives that were going on that they could apply for and how, so that we were trying to just put it out there. Like, these are all the things that are here to help you.
Yeah. All right, well, let's get past that. But
it's good. That COVID talk.
It's good to it's good to talk about because the industry did step up and we all banded together, got money out the door, saved a lot of businesses from going under. So I want to keep the conversation alive, but I also want to move on to bigger and better things now. Yeah. So in your top 10 lenders, the ones you really like working with, right? The ones you guys really like working with, like, why do you like working with them? Like, what are they doing? What are the traits of these good lenders so that all the lenders watching, they can say, well, maybe I should step up my game and kind of do some of that type of stuff, you know? Like, what are those traits?
Yeah, just going back to those key points, they're really transparent with us. If anything's changing in their appetite or their parameters, they're giving us a good heads up. So that way we know and we don't have a pipeline of deals they're going to have to kick out or something like that. Communication. So constant communication with, hey, Bobby Joe's deal is having this issue, and then we can help resolve it, whether we need to go to the franchise and get more information or have a call with a client and figure out a solution, whatever it may be.
Yeah, that's a good, I'm going to pause there for a sec. So the communication is, that's obviously a big part of all of our jobs, but like in my head, when I'm a BDO, which I am a BDO, but right now I'm a podcast host, but I always think, all right, something happened, like a decision was made, or there's a problem, or there's something good, whatever it is, or a report's in. It's, tell the borrower, tell the referral source. It's like, boom, boom. It's like, yeah. And then I guess some lenders just go on their way and just don't feel the need sometimes to tell all the different parties. Sometimes no one, right?
Right.
But that's a big criticism you hear along the way. But the folks doing it right, and it's not hard, right? What else?
I would say just having flexible terms. So having an appetite where you're not just wanting the $1 million A+ client. You're also willing to do some of the $350,000 deals,
you go to
startups, things like that.
You go to 100,000. So
yeah,
lenders have to be able to take you. I assume you have obviously you have sources for those small loans as well, and a multiple disbursement $100,000 loan. Like, I'm sorry, don't call me with that, but like, no, I'm just being real.
It's a small pool of lenders that like to do that because it's a lot of work. Still.
It's going to be the most work,
right?
And it's going to be small, and it's not going to be. I mean, it's And with the new changes to small loan, like first of all, 150 and under, you have that. You have 150 to 500. It's all easier. But once you get anything with construction, like are some of those small $100,000, do they involve like tenant improvements?
Not really.
No, this is more like get a truck, get some working
Yes,
capital. Okay.
working out of their home.
I could get on board with that.
Yeah.
Okay, cool.
Yeah, those are usually pretty quick and easy.
I had somebody on my podcast who, his name's Sterling. Shout out Sterling. He's an SBA BDO, and he opened a franchise, and he used an SBA loan, and it was a $150,000 franchise or loan, and he went all the way through the process. And I think it was like a week before closing, this bank, which was a big player in the space, you would probably know the name, for small loans, and they were probably a top 10 lender, and they pulled the plug on like I think everything or something like that.
I think I know exactly what you're talking about.
Yeah, so he had to scramble last minute,
Yeah.
which is, not good. There's no question there, but I just thought of that.
Yeah, and it happens, and that's why we always try to tell people like character is such a big thing. Even though you're getting this approval letter, a bank is not 100% guaranteed to get to that funding stage. Like you've got to do your part. It's good to have good character and don't be mean to the people that are trying to get this loan done for you.
Right.
But a bank can pull out at any minute. Now, back to what we look for in lenders, we want that reliable relationship where, hey, here's a term sheet or a proposal letter. We want that to look just like the approval letter. So we don't want to switcheroo and our clients to be really frustrated, irritated. Yeah. So that's another thing that we look for. But yeah, I mean, it happens. It doesn't happen often, luckily, but we have had a lender relationship in the past, 2019, and then going into 2020, we did a lot of volume with them. And I think a lot of the industry did, and they just pulled the plug on most franchise deals.
When they weren't transparent about it, it was very abrupt.
It was happening and then announced it. And then it didn't matter if these people were about to start construction.
Right.
And they just...
Well, I mean, when you're a week before closing, you got people in place, everything's planned.
A lot of money,
you need the money
already on the line. Yeah.
It's serious. Yeah, that's unfortunate. I use the word bait and switch because I want it to sound really bad, but the reality is, 5% of the time, maybe the terms change because you uncovered new information,
yes.
Right? And then you explain it that way, and that's fine. But there are also lenders that they make it a practice to get a deal to the loan committee. They've spent 6 weeks, 12 weeks, whatever, and they said, yeah, we'll do it, but more equity. And it's like, well, first of all, I wouldn't have gone with you, but I can't switch because I'm too late in the game.
Right.
Those lenders should be wear a letter or something on their, what is it?
It's like a scarlet letter.
Yeah. Or something like that. But
Yeah.
I want to just be careful with my speech. But like you said, like, yeah, borrowers might think, oh, I got an approval. When are we closing next week? I don't know. Like, as you're talking to borrowers, right, on the front end, you're educating them. Like, what are the misconceptions they're coming to the table with? Where are they needing the education on the front end to prepare themselves for the road ahead?
Timing is huge. So making sure they understand kind of the sequence of events to get to the finish line, but don't get ahead of yourself. Don't go sign a lease and then come to us and say, hey, I need a loan, because you're already way ahead of the process and now you're on a tight timeline. Down payment. A lot of people come in, don't understanding they're going to have to put some money into the deal. So explaining, yes, you're going to have to put some skin in the game. So explaining that. And then there's a big conception of the difference between total project cost and loan amount. Explaining that, no, your total project cost is everything you need to get open, and the loan's coming in with a percentage, and then you're coming in with a percentage. And I think the other piece of that is just really drilling it into them that you have to be transparent and honest with us, because we do have about a 98% approval rate, and that 2% are the clients that didn't disclose things to us that we asked about up front. Criminal history, bankruptcies, judgments, those are usually the biggest things. So just really trying to drill in their head, like, it doesn't matter how long ago these things were, you've got to let us know, because this is a government guaranteed program. So the forms say at any time, did you have this?
I told you earlier I do like one startup franchise a year. I used to do a lot more. I used to play in the space when I was building up my business because it was easier to get my foot in the door. Then I learned why, because they're hard, because you're dealing with first-time business owners, and it's a startup, and it's construction. And the construction, I'll emphasize the construction for me, like a lot of them are startup construction. So when you get the approval, you have to now go through this process. And I don't know, maybe different lenders you work with do it a little bit differently, but I would always get to the end and we're waiting for certain construction documents. We're waiting for certain approvals from the city, but you have vendors that need to get paid, and the timing, it just always seems like it just doesn't work out at the end, and they are feeling the pressure because now they got a grand opening date they're working for. Is that still a thing in that space?
It can happen. I mean, and as many times as we'll tell clients, these are the things you're going to need to close your loan, and this is a sequence of usually how those things are obtained. They don't listen, and so then they'll get to that finish line and they'll just buy the business vehicle and not tell someone, but they want to be reimbursed for it at closing. So, well, you got to provide an invoice now and you got to provide this, and it just drags out that closing date. And then, yeah, I mean, you're seeing a lot of dragging feet with landlords, and construction costs are high right now. And so that can really delay the process. So, yeah, you still see that.
Are landlords being more difficult these days?
It depends. Some people have a great experience, and then I have a lot of clients that are just so frustrated because they just can't seem to get a landlord to be responsive. So they're waiting months to just get a signed letter of intent, or waiting months to just hear back on a drafted lease negotiation. So we are still seeing that being a really big piece of the process as far as timing.
Yeah, and then the landlord consent or landlord lien waiver or whatever you want to call it. That's another one. Like I deal from it with the landlords more on a business acquisition space. Like that's what I kind of do more of. And I find it, challenging to get a landlord to sign that document and a 10-year lease, which I don't even know what the requirement is with the new SOP 7.1. I'd have to double check, but the last version we had a little bit of flexibility there, but you still have to kind of we still always want, ideally you have a 10-year lease and a landlord, whatever. Let me get out of the weeds. Yeah. But when you're selling a business and the tenant's already in there, you have a lot less leverage versus, hey, you have empty space, we're going to fill it, but you got to sign X, Y, and Z. Mm-hmm. So maybe from how I see it, it's a little bit different because we don't have as much of a carrot, but they have been more difficult from what I've been seeing. They want, more deposits. They want more, guarantees and stronger, credits. And I'm lending money to these people, and I'm comfortable with it. They're just, doing a lease and they're wanting to, really dig in.
Yeah, I think it's great when a brand has a really strong real estate team that really helps with that process, that are very hands-on, helping the franchisee work with the landlord, work with the general contractor, and they have specific teams for that. I find that those types of brands just have much more of an efficient process.
Yeah. Especially on the construction side, I think.
Absolutely, yeah.
That is a big one. Mm-hmm. By the way, speaking of business acquisition, since that's what I do, and I know you do a little bit of that on the franchise side as well, which, is great. Maybe I'll sign up into your match portal thing. But, it's interesting, like franchise, and I think this will be a good place to kind of end it, but like the franchise space is kind of exciting because it's like, first of all, people are maybe exiting corporate America. Mm-hmm. It's the start of something new, and you don't really know how the store is going to do, but you get an idea reviewing the FDD, talking to other franchises in the system. Yeah. And it's like, okay, all I know is I want to work for myself. This is a possible way to start a business with some guardrails. But then there's also the people that end up going and buying existing non-franchise businesses, and that's gotten a lot of attention in recent years. People buying boring businesses, podcasts, social media have really brought that idea to the forefront in a way where I think franchise development had been doing it a lot better, getting the word out there. So do you ever see anyone who's considering kind of both options, or is everyone already dead set on starting a franchise?
No, absolutely. We get people coming in that are looking at a non-franchise. They're usually organic leads that we get in from our website, or maybe they heard about us from someone else. But we do non-franchises too. But we just have to make sure they have a very concrete business plan, cash flow projections, that they have the whole story of how and why they're going to be successful at this. Some lenders want some really relatable or even maybe direct experience, since they don't have that franchise support. But I just had a deal where she was doing a franchise, then she switched. Now they're doing a restaurant, but they have a restaurant background. And so it just made sense for them. And so far it's going well.
Okay.
But yeah, definitely different things to look for. Just got to be tighter in the story of what you're doing and how you're going to be successful.
I mean, it's certainly exciting to, be involved with people at this pivotal point in their lives, which is, you've been 10 years, you said, and counting at
11.
Yeah. At one place too, at one company. That is an accomplishment in and of itself in our world. So congratulations.
Thanks.
And thank you for coming on the podcast.
Thank you for having me. This was fun.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.